to give you an overview of the global regulatory landscape. Because as all of you who follow this space know, of course, last year there was all this excitement in the world about digital assets, and then immediately after came the concern from regulators. So you saw China ban crypto trading, South Korea and Japan raise concerns, Germany and France calling on the G20 to regulate it, someone from the Bank of International Settlements saying it was digital assets are parasites and Ponzi schemes. So we have Sunil here to sort it all out for us. He's particularly well suited to do so because he has served for the past 2.5 years as the sole US board member to the International Monetary Fund, the IMF, responsible for casting the US vote on all IMF decisions. And he took an active role in the IMF's Financial Technology Initiatives and Risk Unit. Previously, he had a long and distinguished career in corporate finance at GE Capital, at Western Union, as his own investor, and he is a masterful fencer, so ask him about that later over cocktails. So with no further ado, Sunil, could you tell me a little bit about your role at the IMF, the background, and what kind of work the IMF does in this space?
Thanks for the introduction, Anja. Ladies and gentlemen, I'm pleased and honored to be here. I am no longer at the IMF, and I am no longer within the US Treasury Department, so I'm free to speak my mind. And many people ask me how does one actually get to be the US board member to the IMF, and since we've had President Clinton here before, I'll tell you it's very simple. All you need is one of the presidents, like President Obama, nominate you. Then all you need is the Senate Majority Leader Mitch McConnell to confirm you. And then finally, when there is an administration change, halfway through a term, all you need is that the next president, President Trump, and Treasury Secretary Mnuchin said that it's okay for you to say. So,
your confirmation was the last moment of bipartisanship.
Following that simple process, when I joined the IMF, actually, it was a really interesting time. This is winding the clock back 2.5 years, Feb 2016, because the IMF had just started on a number of initiatives that are very relevant to today and to this room. It had issued at the time a paper on virtual currencies. IMF actually came out and issued a paper on virtual currency. It then went on and created a high-level fintech advisory panel, inviting the who is who of the fintech world and crypto world and blockchain world into that. So Ripple was one of them, but Ant Financial was also part of that small group. It then went on and in the 6 months after that, wrote a paper on financial technology and the developments, and addressed a particular issue that was emerging at the time, what was referred to as de-risking. And we'll talk about that a little bit later, but de-risking refers to the sudden collapse of correspondent banking relationships around the world. So the large clearing banks from the UK, Canada, US, Germany were shutting down their correspondent banking relationships around the world, leaving many countries with no connectivity into them in terms of sending money in, or maybe with one connectivity. And you could imagine if you're the only player to get money in, what that does to
and
pricing.
Why were they shutting down those relationships? Just risk?
Those were related to basically a risk-benefit analysis of those financial institutions. And what had happened is that the cost of doing business in dozens of these countries became very expensive. The regulatory cost, compliance costs, and the corresponding fines or risks associated with that. And we'll talk about that a little bit later. On the other hand, there were only, maybe in terms of volume of transactions, not that many. So private sector players made a decision not to continue doing that business. And the IMF was really uniquely situated to address this issue because of a number of things. So everybody has heard of the IMF, but actually not a lot of people understand what it does really. Everybody knows we bail out countries when they go into trouble. Everybody's been seeing the news about Argentina. It's the lender of last resort. But that is actually a smaller piece of the activity of the IMF. A second very large piece is that the IMF actually surveys every country every year, so it is knowledge about the macroeconomic picture of those countries. So when a situation like in Argentina occurs, it's ready to move. The third piece of the IMF activity, and this is relevant to this space, is the technical assistance, what we refer to as capacity development. And here, when this de-risking notion was happening and the banking relationships were being stopped, the IMF's team actually went into dozens of these countries to train the central banks to improve their own AML CFT compliance, thereby reducing the risk of the international clearing banks to be able to go back in.
Mm-hmm. Great, thank you. Christine Lagarde, who is your very dynamic leader at the IMF, has said that we need to keep an open mind about blockchain and cryptocurrency assets because of their potential to improve both the global payment systems, financial inclusion, foreign aid. You've talked a little bit about the global payment system in terms of correspondent banking, but give me some of the other global use cases that you think are really front of mind here.
Good question. So, at the fund, at the IMF, you hear a lot about fintech and this investment and that, but we always try to identify, first of all, what are the drivers to some of this, and analyzing the drivers in this boom in fintech. So artificial intelligence, cryptography, investment in the spread of mobile internet, and of course blockchain technology, DLT, were some of the drivers that were coming in. And then we try to look at not at anecdotal evidence, but real numbers. So how much money is now going in? And if you take a look at, say, from 2010, the amount of investment in financial technology has really boomed. VC investment into fintech in 2010 was less than $1 billion. Now it's $17 billion. So both the drivers and the numbers were coming up. So that for the IMF was then say, okay, so what are now the opportunities to look at that, risks and the opportunities? Maybe on the opportunities side, we talked about remittances, and Brad mentioned remittances and the cost of remittances. So cross-border payments, you talk about business-to-business payments, and that's about $150 trillion. Remittances and generates about $240 billion in revenues. The remittances, so person-to-person payments, mostly by migrants, is about $500-600 billion, and there the cost $600 billion
a year.
And there the cost is 7.5% in terms of what they end up costing the transaction. So, but then if you dig further, well, what are the costs and what can you address? In a remittance transaction, the four key costs are, of course, compliance. In IMF analysis, it's about 15%. The FX, but again, round number, about 15%. The actual back office operations is about 40%, and then the funds, the captured funds, is also about 30%. So that's about 100%. So you could see that with DLT, you could actually almost address every single one of these, and you can see how that 7.5% could actually come down significantly.
You were using blockchain.
Exactly. So that would be one use case clearly, and of course, this room and Ripple itself is in the forefront of changing the dynamic there. The other example, let me give you two more examples that are relevant. Combating fraud and corruption also in payments could also be addressed with some of these new technologies. We, together with a few financial partners, actually it was an initiative led by Citigroup. They called it T4I technology. Technology for integrity, and that was a global contest with public sector, private sector partners asking for firms, not just startup firms, but large firms to come up with initiatives that, with the use of new technology, including blockchain, address fraud and corruption, and that culminated in a dozen firms coming to the IMF, all of whom then have received contracts, whether it's with IBM or Citi or PwC, to so actually the ideas they had are now actually put into business. So I'd say that's a very good example. And third, actually one of my favorite examples is and it's to be tested, is the application of DLT for foreign aid. Foreign aid is massive and is massively inefficient.
Yes.
So about 30%
corrupt. What you actually mean by leakage?
So what I mean is probably about 30% of it goes missing. Intermediation, fraud, friction, yes, loss. You add all that up, and the problem is that you actually don't know where it goes missing. So once again, if you were to able to track a U.S. aid program of, let's say, $50 million to 5,000 farmers in Afghanistan, how much of that 50 today is getting there? You probably don't want to really know the number, but you don't even know where it's gone. So that is an application. I think that there are some pilots are beginning on that, but another area which I think is a significant opportunity.
Absolutely. During my time at the State Department, this was a constant source of frustration, is that you would give these enormous sums of aid and very little was ending up on the floor. Those are three very important use cases, and of course, as Ripple is working on one of them. Let me switch topics slightly to cyber. We've heard a lot about cyber intrusions of cryptocurrency exchanges. They've been a big problem, and I know you worked on some of these issues at the IMF. How would you go about mitigating these risks?
So yeah, cyber. So one of my favorite persons is Christine Lagarde, the MD at the fund, and when she talks about the opportunities related to blockchain and fintech in general, she of course identifies the very real issue of cyber risk, and again I refer to some research that the IMF has done, and some way of trying to forecast what it actually means. And in certain scenarios, if you think the profitability of the global banking sector is about let's say $900 trillion, but in under certain scenarios, about 9% of that could be lost to fraud, which is really significant and could be very systemic risk. So here the challenge is global cooperation. So first of all, the countries need to cooperate with each other, the big countries, and you have some geopolitical issues there, having same countries in the room and sharing their approach to cyber. And
as it relates to cryptocurrencies,
as it exactly,
yeah.
Well, both, because certain countries are spying on others, and then you're not going to sit in the same room to discuss how you're trying to catch that. And the other one is of course training. So I talked about the EML training the IMF staff has done. So the IMF is now doing training on cyber. Many central banks don't have even the basics in place for that. And again, we're just trying to increase the level of awareness. So I think that's the first step there, really.
Got it. Thank you very much. Let me bring us back to the regulatory side of the house. And I talked about how there was this huge euphoria about digital assets, and then the terror, because if you've worked for a government as I have and as you have, one of the things that determines your sovereignty is your own currency. And so I think countries are all struggling with how do we regulate this space. And I know from my time at Ripple that we've been going around for years essentially begging people to regulate us and to regulate this space sensibly. Give me an overview of who in the world you think is getting it right and what you think the right balance should be.
So, first of all, I think we have to think of what are the principles of regulations here, and are all the countries abiding by it? So, the world's really set up to regulate on the basis of entities as opposed to activities. So that's the first mind shift regulators need to have, so that it's not entities who are doing all kinds of things, but activities that you want to regulate. Secondly, proportionality of regulation is really important. You have seen sometimes exorbitant amount of fines, I would say, in certain cases, maybe not a corresponding level of crime. I would say so. Proportionality is very important.
And you're seeing that in the cryptocurrency space?
You see that related to anti-money laundering.
Oh yeah.
Yes. And not safeguarding. Now they could be related to a cryptocurrency transaction or not, but you've actually seen that. The international coordination on this is very important. As a third and fourth, which the regulators have been doing, is of course these regulatory sandboxes. You ask about where I think they're getting right. So there'll actually be a lot of discussion on this tomorrow, and I don't want to take the thunder from tomorrow's session. But so Asia, of course, hit it out of the block, and is doing very well. Everybody talks about Singapore and Thailand. You'll hear about tomorrow. The Saudis and the Emirates are doing interesting things, but I would say the two that I like are one is actually brand new and very boldly called the Blockchain Act by Liechtenstein. I don't know how many people know where Liechtenstein is. It's kind of
tiny country.
Tiny country. It's well known that it has a lot more registered companies than inhabitants. So similar to Delaware in that sense. And
not in the EU, importantly.
So what's very important that they're member of the EEA, the European Economic Area, but not the EU. So the EU has 23,000 pieces of legislation. So only about 5,000 of that apply to Liechtenstein or Switzerland, which enables them to move relatively faster compared to their EU counterparts. And Liechtenstein has taken a bold move. They've drafted the legislation in the spring. It's basically going through consultation. It'll become law. I think November is the deadline, and it's for a tokenized economy. I understand that for ICOs, it's becoming the next destination, and clearly they're trying to bring business there. So they're going to treat it as a normal commercial transaction, the tokens. So I would say watch that space. It's really interesting.
And from what little I understand about it, when you and I talked about it earlier, is it doesn't have this arbitrary distinction that you're seeing in the US between what's a currency and what's a security, and trying to fit this space into basically a Supreme Court case from the 1930s.
Correct.
Instead, they've just created a new category, and they said there needs to be transparency around this space and protections for investors.
Absolutely, and it's brand new legislation, and it's not just a spur of the moment idea. They've been working on it quietly for 2 years.
Yeah.
So, and because they have such a sophisticated financial, regulatory, soft and hard infrastructure, they've actually had the wherewithal. So, and the other country, of course, is that has done very well here is Switzerland, and if you guys are Zug, the town of Zug is now called Crypto Valley. You thought it was the end of the Swiss banker. Well, Switzerland here rises from the ashes with crypto, and really is taking a lead.
And can you just explain a little bit what it is about Zug that makes it so special? Like, what are the regulations that make it easier there?
So Zug is a canton, is a capital of a canton that has created special incentives to come and move in there, and made it easier for crypto and blockchain currencies to set up. So within the federal state of Switzerland, they've created easier ways of entering. One of the things that firms complain about, startup firms and crypto firms, that they don't get the time with regulators. So it takes them months and months. So both in Liechtenstein and Switzerland, in Zug, you can get on it and very quickly be in a meeting with a regulator, get the right kind of guidance. Now, they're not a free-for-all, so they'll have their minimum capital requirements. So in Liechtenstein, it's 100,000 euro. They'll do their due diligence. Your prospectus needs to describe the asset, the underlying asset of the undervalue of the token. So they're trying to do it as properly as an IPO for an ICO. And so those would be the two that come to my mind. Here, the UK has done a good one. One thought that maybe taking a geopolitical view here, the UK is probably. I was in London 10 days ago. It looks like there'll be a relatively hard Brexit in terms of financial services, which means that the UK will have to look for partnerships around the world, outside of the EU, at least in step one. And I also get a little sense that both the EU and the UK are assigned to it, that in step one, in certain aspects such as financial services, there'll just be a breakage before a rebuild. And of course, politics can change in 5 minutes, but that's the sense I got in 10 days.
Me too.
So now here in the US, we haven't done a regulatory sandbox, although the Treasury's report that was published just a few months back calls for it, and it's a bold move that has a very good recommendations. But one complication, of course, we have is that the state regulators, and we've got 50 of them, they don't necessarily like to collaborate or take instructions from Washington. But you could see a scenario where the UK is looking for partners, and California as a state could create a regulatory sandbox cooperation. The two economies are similar in size. Within a state, it's easier to manage, because the sandboxes need to move out of their little corners and really, as a first step, test domestically, but then really go international. And you could actually think of a very interesting California, UK sandbox corridor on blockchain or crypto. So you have to think out of the box, and I see that coming from the UK, because they'll have to. And if we in the United States are not able to get something on the national level, then maybe a state, certainly like California, is able to do that.
Right. It's an interesting idea, because you could imagine it in certain things, like where do you set up ICOs and companies in this space. But of course, the big issues, anti-money laundering, know your customer, how the SEC regulates things, those are all national. We're in a really unique space here, because if you go back to the origins of the internet, of course, it came through DARPA and through several well-respected US universities. And in a way, we adopted a multi-stakeholder approach, but the US dominated the conversation about how to regulate the internet. And here, we're just not. There's a huge amount of innovation here in the US, but I think our regulators have been a little bit slow off the mark. And so, a huge amount of innovation in China and elsewhere. Yeah. And so you see Liechtenstein leading the way, which would have been unheard of for the internet.
Yeah, if you think of the start of the internet in DARPA, it was a US government-led effort that then became privatized, so to speak, in the mid-90s. But then that really set the ground for this next generation of US companies' leadership, which really translated into continued US dominance as in the world economy. So now you have a situation where actually you don't have this kind of focused leadership on one hand. On the other hand, you do have a very innovative and countries such as China, which is now on a PPP adjusted basis, the economies are pretty comparable. So first of all, we're not doing as much. Others are doing a lot more. So that's why I think the Treasury's call for action now is actually really welcome, and I congratulate the Secretary for coming out with that paper.
Good. Yeah, it's time.
Yes.
Let me ask you one other important thing, because you work with central bankers all around the world. There has been a lot of talk about central bank issued digital currencies. And to those of us former government officials, we think, Venezuela, good luck. You have hyperinflation with your real currency. I don't know how your digital currency is going to be any better. But you also feel a little bit worried because, in a way, the US and the West, the US and Europe, have been so powerful at imposing sanctions on places like Iran and North Korea because we control the world payments and banking systems. And so many of those sanctions are enforced by companies having to say, well, if I want access to the US financial system, I'm going to stop doing business with Iran. And as you see this move towards sovereign issued digital currencies, central banks getting into the act, do you worry about what happens to sanction regimes, or are you optimistic about it?
So CBDCs, central bank digital currencies, has been a fairly hot topic of late, and clearly the IMF is looking at it very carefully. Now, so just to be clear, we're not talking about a country issuing a new currency. We're talking about country X issuing its own fiat currency in digital form. So it has to represent all aspects of money. It's a unit of exchange. It's a store of value. So but in certain countries, it could actually be much cheaper, more efficient, more transparent to issue some of these currencies. Now, you mentioned a couple of examples like Venezuela and Zimbabwe, where some people would actually rather hold a cryptocurrency issued than their own, and there are certain cases where that is I think it's natural that you see that evolving. Unfortunately, we see some other not so nice cases where certain firms go and offer to certain island states virtual or cryptocurrencies that where the business model is, well, I'll issue your currency and I'll take 30% of it on day one, and then good luck, Mr. Country. And we have to be really careful of that because that ultimately it's going to end up really sadly for the people in those countries, because they're going to have a piece of something that's not going to be worth much.
That's right. Well, thank you very much for being with us and for giving us the global overview of this space. We appreciate it. Thank you, Sunil.
Thanks for your time, Anja. Thank you. Thank you very much.